Hi, this is Nick Katko from BMA. Welcome to our monthly webinar. Today's webinar is about how to become a Lean CFO. It's a little bit of a preview of the second edition of the Lean CFO, which will be out in February, but it's really, I'm going to explain the process of sort of a summary level in 1 hour of how the steps to become a Lean CFO. Excuse me. So first, I want to do my technical check. I want to make sure that you can see the screen, you can hear me, and you can see me. And so if someone could sort of respond in the question panel and let me know that everything's working, it would help. All righty. I got a response. Thanks a lot, Brian and Grant. All right, so let's take care of some of the administrative tasks. First, if you would like a copy of the presentation, it is in the handout section of your control panel. You can download it. If you have any problems with that, or if you're watching a recording of the webinar and you'd like a copy of the presentation, just send me an email. I'll be glad to send one out to you. If you are a certified public accountant in the United States and you would like to earn 1 hour of continuing education credit for this course, you must answer 3 of the 4 polling questions. You have to be logged into the live event for 50 minutes, and I will be glad to send you a certificate in a couple days after the webinar. And if in case you just want a certificate of attendance without any CPE credit, I'll also be glad to send that along to you. Excuse me. All right, so let's talk about what we are going to learn today. First, how to become a lean accounting head coach. This is about leadership, and in my personal experience as a Lean CFO, and also having the opportunity to help many companies over the years, I think that the CFO or the senior most accounting person in the organization, they need to adopt a head coach mentality to provide the leadership. So I'm going to review sort of what does that mean. Then the second significant piece of becoming a Lean CFO and having a successful Lean accounting transformation is for Lean accounting to be part of your Lean strategy. And we'll talk about different aspects of that and what that means to Lean accounting and what that means to sort of your Lean strategy. Those are sort of like building blocks. Then from there, you have to build some box scores, okay? And we're going to review that briefly. In 2023, we're going to have more detailed webinars on exactly how to build box scores. Then the next step is to integrate Lean accounting with Lean practices, okay? You have the box score. The box score is just a tool. And you have Lean practices. And so the key is for both to work together. Many times I've been asked, what's the benefit of Lean accounting? Or, what's the ROI of Lean accounting? And first of all, it's a hard question to answer because it's hard to really give a number, but, Lean accounting works with Lean. Lean accounting does not stand on its own. And that's, I think, what's important for people to understand. So the real question, if you're ever asked, well, what are what's the ROI of lean accounting? It's sort of like, what can the ROI of lean be with the proper lean accounting numbers in place? Then we'll wrap up, take some questions if we have time. I'm also going to review the questions during the polling questions while you're doing that. And I might, if some questions are there, I might answer them right after the polling. All right, so let's do our first polling question. Okay, so everybody can practice this. I have to do my administrative stuff and launch the poll. This is just basic attendance checks. So I'll give you about 30 to 45 seconds to do this. Of course, I'll check for questions too. All righty, I'm going to close the poll. I'm not going to share the results. And we will move on. All right, becoming the lean accounting head coach. For those of you who may not recognize this picture, it's Bill Belichick. He's the head coach of the New England Patriots. He's been the head coach for I think over 20 years, and he's been very, very successful. And I'm using a sports analogy to introduce this part of the webinar because I guess what I've learned is that if you think about any great head coach in any sport that's had sustained success over time, one of the characteristics or a common denominator is that they all have a system or a process. In fact, the head football coach at the University of Alabama, Nick Saban, his system, he just calls it the process. And what's interesting is that these successful head coaches build these systems. The players move in and out. The players change every year, but they work within the system, and they have to learn how to work within the system. And that guarantees success or helps success. Now, the Toyota production system from a business viewpoint is sort of the same, is that it's a system that the employees learn how to work in and operate in, and the system is greater than any person. And so from a lean accounting viewpoint, it's really important that you sort of adopt this mentality that you are going to be the head coach, and you are going to, there's this transformation process, but the transformation process is building a new system. And so you have to have the elements of the system in place. So let's look at some of these elements. First of all, let's talk personally, okay? How do you become the head coach? First of all, it's about changing thinking, okay? You must believe in the benefits of lean accounting before beginning the transformation. You cannot take a wait and see approach. Oh, well, we'll see if it works or not. Part of being a trained accountant, especially if you are a CPA, and especially if you worked in public accounting, there's this aspect of it being, it's called professional skepticism, okay? And as an auditor, that's very, very important. You need to verify all the information and make sure there's support and all that. But when it comes to lean accounting, and I've had some, CFOs and controllers sort of take that approach. Well, it sounds good, but I want to see it first, and that's not going to create it's not going to allow you to become a leader, okay? Because you're going to wait and see. So you have to understand and believe in the benefits of lean accounting and change your thinking. This is sort of what happened with me personally in my first job as a CFO, where I learned about lean, and we logically transformed into lean management accounting, and it all just made a whole lot of sense while we were doing it. The second aspect of becoming a good head coach is it's about learning. A lean accounting transformation is a long-term learning experience for you personally, for the accounting team, and for the whole company. And think it's about learning. We're putting a new system in. We have new numbers. We want to use those numbers in our analytical and decision-making practices. So we have to learn how to do that, and we have to practice it, okay? And so everybody's going to learn. Kindness. I got this from my friend Karen Ross, who has the book, The Kind Leader. This transformation, show that you care about people. And this sort of relates to the learning. People are going to think differently. Some people are going to pick up on lean accounting just like that. It's sort of like, yeah, I'm all in at the beginning. Some people are going to take some time. It take longer to understand, okay? And sort of be cognizant of the fact that, not everybody thinks and learns at the same pace. So show you care about people. Finally, avoid interruptions, okay? You have to have a plan to overcome what obstacles you will face. And, given any lean accounting transformation, there will be obstacles that you will encounter. It might be systems, it might be culture, it might be the size of your company, it might be competing priorities. The whole, the key is to not let obstacles get in the way. You have to continue the transformation process, because once you stop the transformation process, in essence, what happens is you go back to the old way, and people think that, oh, well, we're done. And a lean accounting transformation is never ending. So don't put a pause on it, okay? You have to keep it going. And if you allow, as the head coach, if you allow the pause, then everybody says, okay, it's okay. So these are sort of thinking characteristics for you individually. It's also important to be able to define lean accounting. Think of this as the lean accounting elevator speech. How are you going to explain lean accounting really, really fast to anybody in the company? And ultimately, how does the company define lean accounting? Okay, we don't want to get into a 15-minute discussion. We have to have the elevator speech. So what is lean accounting? First of all, it's improving accounting processes. Eliminate the waste, improve the productivity in all the processes. Applying lean in accounting. It's also lean management accounting. It's providing useful and understandable information to decision makers. It's also important to explain what lean accounting is not. It's not about changing financial reporting requirements. It's not some new fangled method of accounting, okay? That's not what lean accounting is about. So again, create the simple elevator speech that everyone can understand without asking a whole lot of questions. It's also important to articulate, explain, and understand the benefits of lean accounting. So first of all, what are the benefits of improving accounting processes? Okay, improving accounting is about applying continuous improvement, PDCA, to all accounting activities. Well, you create capacity. If you eliminate waste, you create capacity or more time. If you have more time, you improve the productivity of the process. You also serve customers better. You serve your internal customers better. And in the case of functions like accounts receivable, you serve your company's customers better. And what that does is it improves the morale and satisfaction of the accounting team. Accounting teams work hard. A lot of times they put in extra hours, come in early, stay through lunch, work late, work weekends. They have to get their work done. They have deadlines to meet, transactions to process. That can lead to overburdening, overworking, poor morale. So these are the benefits of improving accounting processes. And it's sort of like the elevator speech. It's important to be able to explain these benefits very quickly so everyone understands why we're on a lean accounting transformation. When it comes to management accounting, this is a illustration I've used in the past. It's a takeoff on the Toyota house. Lean management accounting is about improving the quality of decision-making throughout the company with relevant and reliable information. Okay, what is relevant information? It's understandable and useful to the users. It's also timely, meaning that when a decision has to be made, the information is available and it's up to date. Useful and understandable it's related to lean. It supports lean thinking and lean practices. The reliability of the information is that it's verifiable and valid. It's real, it's actual. And it can be explained. This is where the information comes from. The foundations, lean thinking and leadership. So that is what this is the reason why we are on a lean management accounting transformation, to improve the quality of decision making. Think of improving the quality of decision making as sort of like the purpose or the true north, or answering why. You want to use lean practices to guide the transformation. Now, this is an illustration from the book Practicing Lean Accounting that Mike DeLuca and I published in 2021. Okay, and the design of this graphic was intentional. Okay, what you want to do, if you look at the bottom gear, we want to understand customer value. We want to be able to identify waste. These are basic practices. We want to use lean measures. We want to use plan, do, check, adjust practices in all our work. Those basic foundational practices, when they're put in place, will drive both improving accounting and improving financial management practices, and ultimately lead to better financial leadership. So understand that, success with lean accounting is about practices, and you have to put the practices in place, and the more that you practice, the better you get. Lean accounting is not something that you do and then suddenly stop. So again, it's practices, and we're going to use different practices and all the time in accounting and throughout the company. You can also create principles if you want, okay? So here's a graphic which shows the 5 lean principles and sort of applicable lean accounting principles that define the true north. First principle of lean is customer value. Serve customers better. So what do we want to do there? From a lean accounting viewpoint, we want to deliver relevant and reliable information to our internal customers. The second principle of lean is value streams and understanding and organizing by value stream. Lean accounting, the principle is to align the information with value streams. Lean companies organize, manage by value streams. So the information has to be aligned. Flow and pull, the third principle of lean. We want information to flow to the users. We don't want, and it needs to be there when they need it. The right information to the right people at the right place at the right time. Continuous improvement. We want to improve analysis and decision making throughout the company with the information. And we also want to support continuous improvement. The final lean principle is empowering employees. And what we want to do with lean accounting is we want to empower employees throughout the business to learn the operational and financial relationships to drive the business forward, especially in the areas where they work. What are those specific operational financial connections that they need to understand so that they can do their part to improve operating performance and improve financial performance? All right, so let's launch polling question number 2. And I'll take a look at, see if there's any questions. No questions yet. All righty, I'm going to finish up the poll here. And we will move on. The next part of becoming a lean CFO is to make lean accounting part of your lean strategy. It's very important to make this happen, okay? Based on companies that I've worked with, the ones that have sort of been very successful with lean accounting, this has been very overt, very, very much known throughout the company. It wasn't a secret. It wasn't something that just accounting did on its own. Those who have not been successful basically never really accomplished this. They sort of think lean accounting is something that just sits out there on its own. So this is a graphic, sort of a lean accounting strategic framework. Okay, and how does lean accounting impact a company? Well, first of all, if we start at the top, it impacts customers in terms of quality and value, meaning we're delivering the right information to the right people at the right time. And we are, from a value viewpoint, the total customer experience for accounting's customers is improved. So if you think about the internal customers, we want to break that accounting stereotype of being isolated and, sitting behind our computers and just working on spreadsheets all the time. We want to be engaged. For external customers, lean accounting helps that experience, as you'll see through performance measures and such, is that operations learns how to serve customers better. From the company viewpoint, it's about continuous improvement and profitable growth. The information is aligned with lean to support continuous improvement, which ultimately will lead to increased sales and lower costs. There is a financial aspect of a lean strategy. I mean, if you serve customers better, if you're a for-profit company, you should see an increase in sales. Over time, lean practices will control your costs. From the employee side, it's about engagement and empowerment. Lean is about people solving problems by learning, but you need the right information. It has to be useful and understandable. And accounting, as sort of the steward of the management accounting system, has to recognize this and understand that the management accounting system, if there's information in there that is not useful or understandable from a lean viewpoint, need to stop using it. So if you think, this is sort of like how you have to think about how are we going to align lean accounting in our company. And there's, again, 3 aspects that you want to look at and consider. The economics of lean. Now, if you've attended any of my workshops or previous webinars, you've seen this slide many, many times. And it is very foundational to how lean works financially. So continuous improvement, the primary outcome is creating capacity or more time. If you eliminate a wasteful activity, time is the result. How that time is used, how that capacity is applied, you can apply it to deliver value, serve customers better. You also can use that capacity to achieve cost reduction over time. And from there, how you apply the capacity is how you achieve sustainable financial success. Now, it's more than a concept. It's not an idea. It's not a theory. This is how lean works. So maybe it's more like a principle. People need to understand this is how lean works financially. You in accounting need to understand it. You need to believe it. Others need to learn it, especially senior leaders and executives and owners. We want to break the myths that lean is about cost cutting. Okay, that's not how lean works. We want to break the myth that all continuous improvement needs to achieve cost reduction. Again, those are sort of traditional ways to think about initiatives, but we need to change the thinking about how lean works financially. We also need to create basic understanding of the cause and effect of how do you achieve improved financial performance. If you improve operating performance and you improve capacity usage, you will improve financial performance. You had the cause, improved operating performance, improved capacity performance. The effect is improved financial performance. Now, this is sort of the opposite of traditional top-down financial thinking, where I call it financial engineering, where, owners or executives and accounting, they sort of get together and they say, well, if we want to achieve this much in profitable growth, this is what must happen. Sales must go up by this much, costs must go down by this much, and they sort of just set policy. This is especially true like in annual budgeting processes, where you have to hit your budget, and if you don't hit your budget, and of course the budget is designed with some financial targets, but when you do the top down, it doesn't really consider the level of improvement that has to be done. And as we understand about lean, improvement takes time. It's not, lean is not going to lean will not necessarily achieve short-term financial success. There are exceptions to this, don't get me wrong, but typically it's more of a long-term view of improving financial performance. So how do these cause and effects work? And if you think about improving operating performance and improving capacity usage, what can you get out of that? Well, you can increase sales without increasing costs, your fixed costs. Why? You create capacity. You can produce and sell more. You can serve customers better if you're in a service business. You can reduce your fixed costs as a percentage of sales, which, the best analogy there is, well, we don't have to hire people. We create 20% capacity. We don't have to hire people, and we can get more done. So therefore, costs go down as a percentage of sales. You can reduce your variable costs. You can improve your contribution margin. These are all possible outcomes. You can increase capacity without increasing costs. Again, if you eliminate waste and create 20% capacity, you're picking up a whole lot of time, and it's a whole lot less expensive than going out and trying to hire people. You can improve performance, increase capacity, and you can improve cash flow. If you're manufacturing, if you have higher inventory turns, you have more cash. If you're serving your customers better and growing sales, your accounts receivable is probably flowing better and you have more cash. So these aspects of financial performance, you want to incorporate into all of the analysis and decision making. And we're going to do that with the box score, which we'll talk about in a few minutes. We talked about managing obstacles earlier, okay? If you think about the different aspects of a lean management accounting system, and starting at the top, you have the accounting function, you have the accounting team. All right, so what are the obstacles there? And one is creating capacity. I've worked with a lot of companies over the years, and sometimes you hear from the accounting team, well, lean accounting sounds great, doing box scores sounds great, creating value stream income statements, oh yeah, great, but we don't have time to do it because we're swamped. All right, so that's sort of the obstacle to overcome is creating capacity. And that's where you really have to look at should we improve accounting processes a little bit to create that capacity? What can accounting stop doing to create the capacity to support the management accounting? Then you have the changing roles. So this is, for example, you have cost accountants. Really what you want to do, take those cost accountants and make them lean accountants. You have sort of the traditional controllers where, they might be more focused on the transaction processing. Well, you want them to sort of be able to take some steps back from that and have a broader view of working with their functional peers, managers, to work on lean accounting. On the right, you have the financial and non-financial information. This is where you have to really take a very objective view of the current information that is being used in the business, and any information that does not support lean, you just basically have to stop using. If you think about information systems, primarily the ERP system, there could be configuration and usage practices that you may have to take a look at and modify a little bit, especially if you're in manufacturing and your standard costing system is tied to your ERP system. There's a whole lot of work that has to be done there, but that's a whole other webinar. If you think about the users, users must learn new thinking habits with the information. Okay, and like I said earlier about, it's about learning, and it's about kindness and understanding that people have to learn how to think differently. So, this is where, and I'm a firm believer in this, is that, the accounting team can help others understand the information. So that's why it's really, really important for accounting to get this down. Understand lean accounting, understand the box scores. And then you can serve as teachers and mentors and coaches to help other people work through their thinking. Then there's analysis and decision making. That's about changing established practices. Okay, you can look at all the decisions that are made in your company, how the analysis is done, and they've probably been in place for a long time, and there's information behind that. So this is where you have to sort of untangle this, and you may have to just have a practice with new information to use. You may have to also change the analytical practice a bit to be aligned with lean. So these are just some of the obstacles, okay? And understand that, this lean accounting transformation never ends. It keeps going on. And you don't have to tackle all the obstacles all at once. This is a process, but understand that they will be there. And there's probably some obstacles that I haven't even mentioned that you will encounter. But you, as a lean CFO, and you as the lean accounting function, you need to work through these obstacles. And that's where applying PDCA, lean problem solving, works. What's the obstacle? What's the problem? And what are the root causes? How do we remove it? So those are the aspects of incorporating lean accounting into the lean strategy. The next aspect is building a box score. Okay, this is an example of a box score. I'm not going to spend a whole lot of time on the details because we have some other things to cover here. But there are recorded webinars on our YouTube channel for each aspect of the box score, the performance measures, capacity, and the value stream income statement if you'd like to watch those. We'll also be doing webinars in 2023 on these topics. So the box score is the basic tool to use in analysis and decision making. In terms of building a box score, what you're going to face is this. You're going to find that you probably have some of the information already exists. You're going to find out some of the information does not exist, and you're going to probably have to build it and develop it. And then, as I mentioned a few times, there's some old information, or there's some existing information which you're probably going to have to get people to stop using. So if you think about performance measurements, one aspect of the box score, there's three basic cycles of measurements: daily, weekly, and monthly. And this just summarizes it. Sometimes the daily measures are called cell or process measures. Sometimes the weekly measures are called value stream measures. Sometimes the monthly measures are called company, division, or business unit measures. Same categorization. What's important to understand in building a lean performance measurement system is the purpose of each of these measures. Daily measures are about measuring and meeting performance standards every day. They're used by cell teams, process teams. They're used in the daily huddle. There's typically 3 to 5 measures, and they drive simple, basic, just do it improvements. The weekly measures are at the value stream level, and we're looking at measuring improvement over time. Is the value stream improving? Value stream teams use these measures in weekly meetings. They use them also they also incorporate them in Kaizen events and all value stream improvements. The monthly measures at the company level are strategic in nature. They're used on a monthly basis to understand, is the lean strategy working? The key here is that the measures are much more than just numbers that are being reported. They're designed to reveal problems and issues and measure improvement. So how do you create a lean performance measurement system? This is the linkage chart process, which some of you may have seen me talk about in previous events. So this is the best way to run a linkage chart event is like a 2-day Kaizen event. Get a cross-functional team together, and you build it by understanding the strategies of the company. You connect those strategies to strategic measurements. Those are the monthly measurements. And you can see that, you don't necessarily have to have one strategy and one measure. You don't have to have that. And some measures really help measure more than one strategy. From there, you set value stream goals. So what types of performance goals do the value streams need to focus on to support moving the strategic measurements? Then from there, the value stream can create measures. One way that I've described lean performance measures is it's measuring progress towards a goal. Okay, so if you want to reduce lead time, you want to be measuring lead time. From there, the cells create critical success factors. What do we have to do well all the time? And then what are our goals? And then they set their measures. So what you do is this is sort of a rationalization process. Okay, what are the basic lean measures we need to use throughout the company? Now, this is a framework, okay? These are some basic lean measures that you see here. What's important, though, in the linkage chart process is you actually have to go through and define how are we going to measure this? Where are the numbers? Where are we going to get the numbers? You have to calculate the measure to make sure it's simple and easy to do. That's why it's a 2-day event. And I highly recommend this as a starting point on a lean accounting transformation. Second aspect of the box score is a value stream income statement. And so what we want to do is develop first individual value stream income statements for every operational value stream, actual revenue, actual costs, and create create a value stream profit, or call it a value stream margin. From there, you then can look at the rest of the expenses on your income statement and decide how to categorize them. So in this example, new product design and support costs. Support is sort of the general and administrative. And then from there, segregate all allocations so that in the case of this division profit of 152,024, that reconciles back to the external reporting income statement. So again, build the value stream income statement. It's an internal management tool. In terms of measuring capacity, these are new numbers, and it's really about how are we spending our time. You want to understand how much time we're spending on productive activities that are creating value, how much time we're spending on non-value added activities, which can be eliminated or reduced, how much capacity are we creating due to continuous improvements. How are we using our time? All right, polling question number 3. Hold on, let me get to it. And I don't see any questions. All right, I'm going to close the poll. Actually, one question did come in. Hold on one second. So Grant, he asked the question about how do you frame a talk about productivity or productive and non-productive time. Okay, this is not it's not a time study. What I guess the easiest way to explain this, there's a capacity webinar from 2022 about calculating and measuring capacity. That's the easiest, that's a detailed explanation of how to do it. But you look at, especially if it's an operational value stream, let's say it's manufacturing, what activities create value? What activities don't create value, such as changeover time, scrap, downtime, rework, things like that. So that's really how you take a look at capacity and productivity. All right, I'm going to continue. So final part of this is integrating lean accounting with lean practices. And this is an illustration from the second edition of the Lean CFO. Think about each piece of a lean accounting transformation as a plan, do, check, adjust cycle on its own. So the first thing you want to do is complete a pilot. Then you want to include lean performance measures in daily lean management practices. Then you want to include box scores in weekly operational value stream reviews. You want to include lean performance measures and box scores in continuous improvement. You want to include use box scores in ongoing operational decision making. And then you want to sort of expand it outside of the operational value streams. All kinds of profitability analysis, such as, how does sales and marketing analyze profitability of new orders? You want to integrate it into supply chain, in the procurement process. And then you get involved in strategy deployment and forecasting activities. So again, this is not necessarily how you follow it. You don't have to follow these steps in the exact sequence, but this is typically how you build, because as you get into things like planning and budgeting, those are complex processes. So you have to have, the more that you have on a daily and weekly basis, the easier it's going to be to build everything else. So just some quick examples here. Daily lean management. You have a daily huddle, you have a visual board. You want the lean performance measurements to be part of the huddle and the board. How did we do today? That's what you want to use the performance measurements for. And as we said in the book Practicing Lean Accounting, daily lean management is sort of like going to school every day and learning about how your process works. This is applicable in operations, this is applicable in accounting, this is applicable in any process. Next, you want to create the value stream visual boards where you have more of a trend analysis of the performance measures in graphs, and you understand root causes. You have your box scores present, and it's used in the weekly meeting to manage value stream operations and value stream improvement. For continuous improvement activities, especially major Kaizen events, these are your multi-day events, box score analysis should be required. It may not move every piece of the box score, but that's sort of if you're doing a major value stream Kaizen event, you want to look at that value stream box score and say, what are we moving? Are we improving performance? Are we creating capacity? Are we achieving any actual cost reduction due to this improvement event? Again, the box score provides a nice standard framework of analytics to look at and consider. And it gets back to those different outcomes of lean thinking. And finally, you can use and incorporate lean performance measurements in strategy deployment. If you use an X matrix, if you use X matrices in strategy deployment, your lean performance measures should be the measures that you use. And also, if you have the operational or financial cost benefit, that's where you sort of can incorporate the economics of lean. When it comes to decision making, you use the box scores. The idea is we have a current state box score. We calculate the incremental change of the box score based on the time frame of the decision. We create a future state box score, and we evaluate the future state compared to the current state. And you have to, this allows you to consider the financial impact, the capacity impact, and the performance impact. You can use box scores for future state mapping, planning improvement events, understanding the profitability of increasing sales, make or buy decisions, profitability of quoted prices, capital purchases, and other planning activities, hiring people. In general, box scores can be used in just about every business decision. So here's just a quick example. If you look at the current state, here's the situation. The number of units shipped has increased from about 4,000 to 6,000. And if you go to the available capacity line, you see there's not enough available capacity to meet this demand. And you can see how much time is being spent on the non-productive activities. You can also see the financial impact in the current state. So what do? You look at the alternatives. So in this case, you could hire 4 people to create enough capacity. Now your costs are going to go up from especially the labor cost. Your value stream profit actually goes down. Or you can make improvements. You can improve quality. You can reduce downtime. And you can see that the financial impact is much better than hiring people. So this is what the box score does, is it allows you to look at different alternatives. Just remember this when it comes to analysis and decision making. We want box scores to drive thinking habits. We want those thinking habits to be aligned with lean practices, that lean practices are used to drive financial improvement. We want to use the plan, do, check, adjust to make good decisions. That's the idea of, let's take the box score, let's not cut corners, let's look at the total incremental change, let's look at a future state compared to the current state. And we want to also know that it's about improving economic value. If we create capacity, it's a good decision. We can improve performance. It's not just about necessarily profits. Let's do polling question number 4 real fast. So while you're doing that, Grant, the capacity webinar is available on our YouTube channel. You can go to the website to access the webinars, or send me an email and I'll explain exactly where it is. And then Kevin talked about lean performance measurements. Hold on one second, I'm going to close the poll. Kevin had a question about who drives the lean performance measurement effort. He said he assumes it's senior management as part of a larger initiative. Yeah, lean accounting is part of a lean performance measurement system, is a component of a lean management accounting system. Okay, and that's the way to look at it. Senior management should be driving the lean performance measurement system, but because accounting is good at numbers and good at measuring, they should have a leadership role in this. All right, so just to wrap up, you'll get a survey. Please complete, it helps. If you would like a CPE certificate, send me an email. And just one, final wrap-up slide here. And this is a repeat from the beginning, understand the benefits of lean accounting. It's a long-term learning experience. Understand that the lean management accounting system can always be improved. And then avoid interruptions and pausing. So if you're interested in learning more about lean accounting, we have Practicing Lean Accounting, which is available today. The Lean CFO, 2nd edition, will be out in February. And if you're on our mailing list right now, so you'll be getting more information. We're going to do some book launch activities. And then also, either before the end of the year or early next year, I'll have a monthly webinar schedule for 2023, probably do it quarter by quarter. And we're going to be doing some online courses, and we're also going to start a lean accounting certification process. So stay tuned for this. All right, so thanks very much. I don't see any more questions, and it is at the top of the hour. Thanks for attending this webinar. And if you attended webinars earlier this year, thanks for attending. I appreciate it. I hope everyone has a good holiday season, and we'll be seeing you again in 2023. Bye-bye.